You see the graphics that are on the internet of Jerome Powell with a money printer, and they're printing out money and it's spewing everywhere. There is a lot of people that believe the Fed truly is creating money in the system. The Fed does not create money. The Fed creates reserves, and it's an asset swap. So there's two ways that money's created. This is the way money is actually created. The first is the government. This is the blue box. The government needs money in excess of the revenue they collect. This is the deficit, right? So we spend more than we actually bring in revenue. So how does the government get more money? They issue debt. So as they issue debt, there's basically what's called a primary dealer. These are banks that have guaranteed to show up at the auction. They guarantee to buy the debt from the government. And so we see these auctions happen all the time for 1-year treasuries, 5 years, 10 years, 30 years, whatever. There's an auction. And these banks buy, these primary dealers, they buy the debt. So the government gets money. That's how they fund the deficit. The banks now have the collateral. They have the debt. Money's now been created. The government has now created money by selling bonds. Now, this is where the Fed steps in. The Fed then says, okay, I need to create more liquidity for banks. This is where we talk about bank reserves. This is where we talk about QE, quantitative easing, quantitative tightening as of late. And so the banks have the bonds. The bonds that the banks own now, they have a couple of ways to dispose of those. So they can sell those off to investors, hedge funds, money market funds, whatever, or they can sell them to the Federal Reserve. The Federal Reserve credits their bank reserve account with the amount of credits equal to the amount of debt that they're buying. It's just an asset swap. So it's just a debit and a credit. This is all that occurs. Now the banks have more reserves. And how do banks create money? Banks loan money into the economy. So they loan money to individuals, businesses, hedge funds, money market funds. They loan money out into the system. The leverage that's created throughout the system through some of these operations. I wrote an article last Friday. It's called Money Printing by the Fed, Fact or Fiction. And there's two important points about this. One, all money is lent into existence. Just to clarify the point, nobody's literally sitting around with a money press, printing out dollars and throwing them out to the system. Yes, we do print currency. That's a very small fraction. That's the money you have in your wallet. So your ones, your fives, your tens, your 20s. It is a function of the debt that was issued to create the money to print that currency, but it's a very small percentage of the money actually in circulation. So that's the only printing that's going on. Everything else is lent to existence. But importantly, when it comes to these operations, repurchase operations, without repo, Wall Street does not open. Right. So there is a very important dynamic that goes on in the system of the Fed creating reserves. This is very important, but the primary issue is that I just want to clarify for our viewers that there is a lot of misstatements out there that the Fed's printing money, and that's not the case. We loan money into existence.
Catch me daily on The Real Investment Show. The link is in the description.